Alright, so let's go over today's trade recap slash trade breakdown. Um and I am gonna add another two more trades after this because I forgot to post my losses of my previous two trades that I took. So I'll go over this and the other two trades. Alright, so traded New York session, didn't find actually couldn't not couldn't. There was a setup on German 30, I just didn't enter it. This long right here. Was it this one? No, never mind. It was, yeah, this long right here. I just didn't enter. So going on to New York session, traded SPX. So going on the 4 hour, we were bullish because we broke from this high right here. On the 1 hour, we were bullish again because we broke from this high right here. So looking at that, we're bullish on time frame, looking for longs. Knowing that, I had which one did I had? I had this sell side liquidity marked out. I had, there's a 5 minute order block right here. Yep. There is a 1 hour fair value gap right here. And obviously that was this 50-minute fair value gap. I just won't mark because it's in the middle. So as you can see, price went up a bit and then came down, sweeping the low, filling the 15-minute fair value gap, 5 minute order block, and 1 hour fair value gap. And then as you can see right here, we actually did not get a break of structure on this chart, but on my broker, on my MT4, we actually did get a break of structure from this. So looking at that, I was waiting for a retrace on the fair value gap. So I had equilibrium like this, and I had this fair value gap, and I had this fair value gap. So looking at this, looking at my broker, this fair value gap got disrespected, but this fair value gap got reacted off, given the bullish candle out. Pretty sure, I think so. If I'm, I think it was that way. But then on this candle, bullish candle, I entered, stop below this fair value gap, and then targeting this TP. I'm pretty sure that was the first one, right? Was it? I think that, yeah, I think that was the first TP. Then equilibrium of the 4 hour. Let me just change this to TPs. So, oh, so second TP, and my last TP was, I think, this high. Oh wait, no, I'm the 4 hour. It was, I think it was this one, if I'm not wrong. That low. No, it was this one. There you go. So that was my last TP as well. So with SPX, my lot size, I kind of messed up. So I was literally, when I entered, I was literally risking not even 0.1%. It was literally moving in P's, like 0.0, like 0.10p per move. So I actually re-entered. I waited on the pullback on this candle, and then, oh, let me just remove this, like that. So my re-entry was something like this, stop below this low again, and still targeting. Hold up, I need to sneeze if it comes. I didn't. Okay. Yeah, I re-entered on this candle again. Still using risk management, still risking the same amount I usually risk on a day. And then as you can see, TP1 hit right here, and then I actually got taken out of break even on this trade before TP2 hit, and then obviously the nuke down. So yeah, that's the trade for today. So the confluences were a 50-minute liquidity sweep, 50-minute fair value gap, a 1 hour fair value gap, 5-minute bullish order block, 1 minute break structure, 1 minute equilibrium, and 1 minute fair value gap, and rejection candle. So that's my confluences. Now going back to the other two trades that I took, it was actually the two losses. If I go back, so it was this one. So let's see. Let me just show you the chart. So that's the trade. The confluences for that trade was a 15-minute imbalance, 5-minute imbalance, 1 hour liquidity sweep, 5-minute breaker structure, 1-minute breaker structure, 5-minute equilibrium, 1-minute imbalance, and rejection candle. What I've put down in my notes: bullish bias in the session due to 1 hour and 4 hour being bullish. On market open, there was a dump taking out all the 15-minute sell side liquidity, which 15-minute break structure from the downside, but I was bullish, so I was looking for longs. But the 1 hour swept liquidity, which then gave a 1-minute break structure, which left behind 1-minute fair value gap, 5-minute equilibrium, and then price also gave a 5-minute break structure to the upside, which was indicating we was going upside. So there was this 50-minute bearish, 50-minute bearish fair value gap, which price was respecting, hence why the push down and took us out. So that's the loss of the first loss of the month. Then this loss. So I think that this was the continuation model. So the confluences were 5-minute imbalance, 5-minute break structure, 5-minute equilibrium, 1-minute break structure, 1-minute order block, 1-minute equilibrium, 1-minute imbalance, and rejection candle. So on this, had to use the continuation model with NK, who was live streaming at that time. I did have a bearish bias to start off with on my MT4, as my MT4 was bearish, but the chart and other people's MT5 were bullish, so we went with a bullish bias because of majority won. So went with the bullish bias, then the 5-minute break structure upside when market open, hence why we use the continuation model, as you can see. And that's the confluences I entered off, and from what I've seen on collecting data is most of my losses are coming from continuation model. So from now on, I'm not going to use continuation model anymore, and I'm actually just going to use my own bias on my MT4 instead of other people's MT5. Even if majority says that's bullish, I'm going to go what my broker says. So yeah, that's the 2 trades as well from the loss as well. But other than that, today was a victory royale. You can currently see I'm 3 and 2 for the month. Total gains break even basically. And yeah, that's the trade. So see ya.